Welcome to the Deep Dive, your direct line into the crucial insights from corporate earnings calls.
Glad to be here.
Today, we're digging into the Q2 2025 earnings call for ThredUp. They reported August 4th after the market closed.
And yeah, this one definitely made some waves. Quite a bit of buzz.
For sure. So, our mission today, unpack the numbers, get a sense of management's vision, and really figure out what this all means for the secondhand fashion world.
Which is growing fast.
Exactly. And maybe the bigger question is ThredUp changing from just, a place selling used clothes into something more fundamental, like the infrastructure behind the whole re-commerce scene?
That's the core question, I think. And these Q2 results, they make a pretty strong case for that idea. It was definitely a positive quarter, strong momentum.
Yeah, you could really see that in the market reaction.
Definitely.
Okay, so let's dive into those headline numbers. The beat itself was pretty significant, wasn't it?
It really was. Okay, so GAAP EPS, that's their earnings per share, the standard way of calculating.
Right.
It came in at -4 cents.
Right.
But the street was expecting -5 cents. So they beat by a full cent. That's a 20% surprise. Pretty substantial. Also very strong. $77.7 million. Consensus was more like $73.8 million. So they beat by almost $4 million.
Wow.
Yeah. And that's up 16.4% compared to last year. Robust growth there.
And it wasn't just revenue, right? Margins look good, too.
Yep, gross margin was solid, 79.5%. That's up 70 basis points year over year.
Okay, but the adjusted EBITDA, that's the one that often tells a clearer story about core operations, yeah?
Exactly. Strips out some of the accounting noise. And yeah, this was remarkable. $3 million?
$3 million. But wasn't the estimate much lower?
Double the estimate. They were expected to do about $1.5 million. So yeah, they doubled it. That translates to a 3.9% margin.
Doubling profit estimates.
Yeah.
It's a big signal. Shows they're getting more efficient.
A very powerful signal. And it wasn't just the financials. Look at the customer numbers.
All right, active buyers.
Up 17% year over year. 1.47 million active buyers.
And orders.
Orders surged even more, up 21% year over year to 1.54 million. So, real growth in users and activity.
And cash-wise, are they burning through money or?
Actually, no. They ended the quarter with $56.2 million in cash and equivalents. And they actually generated cash in the quarter, $0.8 million.
Oh, interesting.
Yeah, and the net loss narrowed quite a bit, too, down to $5.2 million. So, look, the top line numbers are impressive, definitely, but the story behind why, that's where it gets really interesting.
Okay, let's peel that onion then. What drove this outperformance?
Well, management kept coming back to their AI-led product journey. The CEO, James Reinhart, he really hammered this point, said they're 18 months in and the results are really starting to compound.
So not just one specific AI gadget, but lots of little things adding up.
Precisely. It's the aggregate improvement. Think about how they sort items, how they price them, the logistics in the warehouse, even personalizing the shopping feed, all these little AI-driven tweaks working together.
Creating a sort of systemic advantage.
Exactly. And it's hard for competitors to just, buy some off-the-shelf AI and replicate that deep integration.
That makes sense. Did they give specific examples like how is this AI actually boosting sales?
Yeah, they did. They mentioned tools like visual search, where you upload a picture, shop similar features. These apparently created a really powerful conversion and acquisition flywheel. That's their term.
Flywheel. Okay, what does that mean in real numbers?
It means signups jumped 30% year over year. And the rate at which visitors actually became customers, that conversion rate improved 18%.
Wow, okay.
And get this, that led to a 74% surge in new buyer acquisitions. 74%, strongest in their history.
That's huge.
And here's the kicker. Because they got so much more efficient at converting people, they could actually spend more on marketing, but their cost per acquisition didn't go up. Their ad dollars just started working way harder.
That's the dream for marketers, right?
Yeah.
Spend more, get proportionally more back.
Pretty much. And they're not stopping there. They talked about debuting AI-generated images, putting items on virtual models for like 100,000 products.
To help people visualize who are maybe new to secondhand.
Exactly. Removes a bit of friction. And looking ahead, they're talking personalized pricing using AI, automating the listing process, stuff that could speed things up and boost margins even more.
Okay, so the AI piece is clearly huge. What about bigger strategic moves? Anything beyond the core product?
Oh, yeah. The big one is their Resale-as-a-Service model, RaaS. They're shifting it to be more open source.
Open source, like letting others use their tech.
Sort of. The idea is to become the back-end infrastructure for other brands that want to get into resale. They said they've renewed talks with over 60 apparel brands.
So instead of just being ThredUp the store, they want to be the engine powering lots of other stores' resale efforts.
That's the vision. Become the universal recommerce layer. They actually used analogies like AWS for cloud or Shopify for e-commerce.
Wow, that's ambitious.
It's huge. It helps brands meet sustainability goals, lowers their customer acquisition costs because they're tapping existing customers, and it creates a new revenue stream for ThredUp high-margin white label services. It's a fundamental shift from D2C to B2B infrastructure.
The picks and shovels play for the resale gold rush. I like that. What about the supply side? Getting enough clothes to sell?
They seem to be doing well there too. Record numbers for requests, receipts, clean-out kits processed, and they highlighted growth in their premium service kits. So those were up 44% just quarter over quarter.
Premium kits, meaning better quality stuff.
Generally, yeah. And interestingly, a quarter of those premium kits came from new sellers. So attracting new sources of potentially higher value inventory.
Good sign.
Plus, they launched this neat feature where if you return something you bought, you can immediately list it for resale yourself.
Oh, clever. Turns buyers right back into sellers, keeps the cycle going.
Exactly. Leverages their existing logistics, makes it super easy.
And underpinning all this is their physical operation, right? They mentioned that investment.
Over $400 million invested in this purpose-built supply chain. Highly automated, specialized for sorting, cleaning, photographing, shipping used clothes. They argue it's incredibly difficult and expensive to copy, a real barrier to entry.
Right. It's not just software. It's the integration with this massive, unique physical network.
And that feeds directly into their other big advantage, data.
Because they've processed so many items.
Hundreds of millions of unique items over, more than a decade now. All that data trains their AI. It's not generic web data. It's super specific knowledge about used clothing brands, condition, pricing, demand. That gives their AI a specialized brain nobody else really has.
The unique intelligence for re-commerce.
You got it. And all these things, the AI, the RaaS, the seller tools, the operations, the data they combine to create this powerful network effect. Better experience attracts more buyers and sellers, which makes the platform better, and so on.
Okay, so internally, things look strong. How are they dealing with the wider economy? Any mention of headwinds or tailwinds?
Yeah, the de minimis loophole closer came up. You know, the rule that let cheap imports, especially from ultra-fast fashion places like Shein and Temu, come in without tariffs.
Right, it's ending or changing.
It's changing. And the thinking is that will likely raise prices for those ultra-fast fashion goods, which in turn could make secondhand options like ThredUp look even more attractive from a price perspective.
It's interesting. So a potential boost for them from that policy change.
Potentially, yeah. And maybe broader tariffs on new apparel could also help their value proposition. They also mentioned the ad market.
Competitive, I assume. With Shein and Temu spending big.
They said that spending came back after a brief pullback, yeah. But ThredUp emphasized that because their own conversion efficiency is so much better now, thanks to the AI, they're still performing really well acquiring customers despite the competition. Their ad dollars are just more effective.
Okay, so that confidence must have shown up in their guidance for the rest of the year.
Absolutely. Big raise. Full-year revenue guidance is now $298 to $302 million. Midpoint implies about 15% growth year over year. That's up significantly from their old range of $282 to $290 million.
And profitability, EBITDA margin.
Also a big jump. They raised the full-year adjusted EBITDA margin guidance from 2-3% previously up to 3.5 to 4.5% now.
Wow. Okay. Clear beat and raise. What about the next couple of quarters specifically?
For Q3, they're guiding to $85 million in revenue. That's roughly 25% growth year over year. And they expect margins to improve sequentially from Q2.
Strong Q3 expected.
But then for Q4, they guided revenue a bit lower sequentially, 73 to 75 million. Still up about 10% year over year, but reflects, the usual holiday season slowdown for them.
And maybe some caution about the economy.
Yeah, they did mention being a bit cautious, citing things like weaker jobs data, housing market softness. So looks like a prudent Q4 outlook, balancing their internal strength with potential external pressures. But overall, a much stronger outlook for the year.
Okay, let's shift to the investor perspective. The market reaction was immediate, right?
Oh, yeah. Stock spiked up around 14–15% within half an hour of the news, settled near 21% up by the end of after-hours trading.
Wow. And options activity.
Huge surge in volume and a really heavy call skew. The put-call ratio was like 0.27, which basically means way more people were betting on the price going up via call options than betting on it going down. Very bullish sentiment there.
And this isn't just a one-quarter blip for the stock, is it?
Not at all. The stock's performance over the last year has been, frankly, incredible, up nearly 500%.
500%.
Yeah, something like 491% over the past year. Compare that to the broader retail sector ETF like XRT, which has been pretty flat or even down over the same periods. ThredUp is marching to its own beat.
Was this completely out of the blue, or were people anticipating good news?
Well, the stock had run up quite a bit before the earnings came out, hit a new 52-week high. Seems like there was some short covering, sure, but also genuine anticipation that the AI stuff was starting to work. Some investors were definitely ahead of the curve.
Makes sense given the overall industry trends. Secondhand market is booming.
15% compound annual growth projected globally, and you see more and more big brands launching their own resale programs, often powered by platforms like ThredUp's Raise. The whole tide is rising.
And analysts.
Yeah.
Media. What was the take there?
Pretty much universally positive. Sell-side firms like Telsey, William Blair reiterated their buy ratings, bumped up price targets. The media headlines were all beat and raise. And you heard chatter from the buy side really focusing on that accelerating buyer growth and the fact that they're hitting profitability sooner than expected.
So this quarter feels like it validates that scale plus software model for re-commerce.
I think so. It feels like 2025 is an inflection point, moving away from just chasing growth at any cost towards profitable expansion driven by their platform. It really repositions them, potentially, from just being a reseller to being this core infrastructure for a massive global market.
Which is valued at, what, $350 billion globally?
Around that, yeah. Huge potential.
Okay, looking ahead, what should people be watching for? What are the next catalysts?
Definitely Q3 results, probably early November. Then, a big one will be their Investor Day in January 2026. They're expected to give the first real detailed look at the financials for the RaaS business. How much revenue is it actually generating?
That'll be key to proving out that B2B strategy.
Absolutely. Further out, keep an eye on the expansion of their Dallas distribution center. That's supposed to double their U.S. processing capacity by the second half of 26. Huge operational step up.
And maybe regulatory things.
Yeah, potential carbon labeling rules in the EU could push more brands toward resale over there, so lots on the horizon.
All right, let's get to our favorite segment. This is not financial advice. Just a reminder, folks, pure entertainment, hypothetical chat. Investing has risks. Always do your own research.
Disclaimer delivered.
Okay, so given everything, the AI, the RaaS, the AWS analogy, what's the big picture takeaway for a hypothetical trade idea?
Well, if you truly buy into management's vision, that they're not just selling clothes, they're building the fundamental rails for the entire secondhand economy, then you're not really valuing it as just a retailer anymore.
Right, it becomes a platform and logistics bet.
Exactly. So the outrageous but plausible idea hinges on that transformation really taking hold over the next few years.
Okay, I'm intrigued. What is it?
Think about a multi-year deep out-of-the-money call option, maybe expiring way out in 2028 or 2029.
Deep out of the money.
Yeah.
Okay, so you're betting on a massive move up. That's the outrageous part.
That's the outrageous part. The implied market cap, if they actually become the AWS of re-commerce, it's, potentially orders of magnitude higher than where they are today. It requires believing in exponential growth and market dominance.
Okay, huge potential upside.
Yeah.
But what makes that leap plausible? Why isn't it just pure fantasy?
The plausible part comes from what we just talked about. One,
Okay.
the AI isn't just talk. It's delivering measurable results now in efficiency and growth. Two, their operational scale and that unique data moat are real defensible advantages, hard to replicate.
And the RaaS.
And three, the RaaS network. If that really takes off and they start signing up dozens, maybe hundreds of brands, that generates high margin recurring B2B revenue. That fundamentally changes the financial profile of the company, makes it much more scalable and profitable, more like a software platform.
So it's a bet on execution, the network effect kicking in, and this whole industry shift towards resale continuing, with ThredUp at the center.
Exactly. It's a long-term conviction play on them pulling off that transformation from reseller to foundational platform, riding these big waves of sustainability and value. High risk, sure, but rooted in the strategic direction they're clearly heading in.
Okay, Fascinating stuff. So let's wrap this up. ThredUp Q2. Exceptional numbers, beat on top and bottom lines.
Driven by that AI-powered customer growth and much better operational efficiency.
Management raised guidance significantly, showing real confidence in where they're going, focusing now on profitable growth.
Yeah, the narrative shift is clear.
So the big question left hanging, really for you listening and for the market, is can they keep this momentum going? Can they really lock in that position as the core tech and logistics layer for this entire global re-commerce world?
Become those essential picks and shovels for that $350 billion secondhand gold rush. That's the multi-billion-dollar question, isn't it?
It really is. What stood out to you from this call? We'd love to hear your take. Find us on social media, drop us a message.
Yeah, let us know your thoughts.
We'll be back soon with more deep dives into the world of earnings.